The vast network of people whose services allow the rest of the economy to hum along tend to be under-recognized and underpaid. That doesn't seem to be improving as the funding model for this sector evolves. Armine Yalnizyan is an economist and Atkinson Fellow on the Future of Workers. Thanks for being with us, Armine.
My pleasure.
So we, of course, saw during pandemic, and we know intuitively that things like healthcare and childcare are super important jobs. They do tend to be chronically underpaid and often precarious. When it comes to how we're seeing the funding model change, what do we need to be watching?
Well, it isn't so much how it's funded, but what we are seeing all over the world is that the need for care is growing. We're going to have the smallest working age cohort we've seen in 60 years. And so people will need help with raising the kids because we're going to need all hands on deck for the workforce. They're going to need help with taking care of their aging parents, and they're going to need to get access to health care, which hasn't been always a given in the last little while, with 6 million people looking for a doctor that they can visit. So these issues mean that the care economy, we're going to turn more and more to these elements of the care economy, which are all in crisis. So there's going to be more money thrown at the care economy in the coming years. And that's going to happen in every country that had a baby boom after the Second World War and falling fertility rates. So more money, more expansion, that means more businesses are eyeing the sector.
And we're definitely seeing that, right, here and elsewhere. Private, for-profit, private equity, private dollars are coming into the sector. It doesn't all have to be government funded. I don't think anybody would say that. But what's the concern of the for-profit model? We did see some weakness in that model in the pandemic when it came to long-term care homes.
Yeah, that is definitely the case. Here, my concern is not so much for-profit or not-for-profit. My concern is private equity's growth, because there's a playbook in private equity, and the care economy is ripe for the picking of it. First of all, you create chains out of single, standalone operators that are getting out of the business. That's especially true in childcare, that is kind of up to here with the rules for $10 a day childcare. They want to get rid of the administrative problems. They can bring in economies of scale. All of these things are really good because you're dealing with streamlining back office and actually finding ways of doing bulk purchasing to get better value for your money. But they also tend to lower what you get and then add user fees on top or extra billing. For example, in childcare, it could be paying for good quality paints and paper for your kids, or field trips, or better food. And what we're also seeing is this very systematic bringing down the qualifications of the people that are providing the care, and lobbying for lower staffing levels, lobbying for lower qualifications. So the worse the care that they are lobbying for, the cheaper for them, but the worse for the people receiving the care. And that's true also in healthcare and long-term care.
And we don't have a ton of time here, but one of the things that you've raised about private equity is it is opaque, right? By its nature, it's private. We don't get to see under the hood of what their deal structure is or their intentions. Are there some sectors that we should put pause on that we might see regulatory barriers to investment?
Well, we're seeing exactly that in other countries. And just because we are slow, to wake up and smell the coffin here in Canada doesn't mean that it's not going to, the same market forces aren't playing here. In the United States, several states have attempted to ban private equity from healthcare. And certainly the federal trade commissioner, Lena Khan, has put the private equity sector on notice because they have tended to jack up prices and reduce quality. So that's what we should be looking out for here too, and put some guardrails around the way we spend our taxpayers' dollar.
Armine, so good to have you. Always appreciate your time.
Thank you.
Armine Yalnizyan, an economist and the Atkinson Fellow on the Future of Workers. Still ahead, the new capital gains tax is facing sharp critics. That's coming up. But first, Apple announced that it will integrate tools from OpenAI into its devices in order to offer new AI features across its apps and operating systems, including ChatGPT. The announcement was met with big pushback from Elon Musk, who called it an unacceptable security violation and said that if it happens, he will ban Apple devices at his businesses. Maybe that sounds extreme, but we're wondering what he knows that we don't. We're back after this.